Alright guys, welcome to my channel. My name is Elia and today we are going to talk about option trading. Finally, yahoo! Yeah, I know a lot of people actually have been asking me like, yo, make a video about option trading. Well, here's the idea. Today we're gonna discuss options, what options are, what does it mean to buy a call option or put option, can you make money off trading options. Before we start, hit that like button, subscribe to my channel. An option, it's a contract but not an obligation to buy or sell stock. So what does it mean? Let's say if you're buying a call option, it means you're buying a contract to buy stocks on a certain date. And if you're buying a put option, it means you're buying a contract to sell a stock on certain dates. Right now, I want to show you how to buy an option on Robinhood. Alright, and before we start trading options, if you never actually traded option before, you have to turn this option on. By doing that, you have to go in the settings, investings, scroll down, and here the option trading menu. So as you can see, the option trading for me is level 3, but you have to turn the option trading on. You will see the down below, you'll see like turn the option trading on. By hitting the button, you will have to provide couple answers for federal questions about your tolerance, risk tolerance, and all this kind of really quick and easy questions. And after you do that, you will be available to trade options, and your option trading will be level 2. You have to actually do some option trading before you can actually turn level 3. Only one thing that not available for level 2 option trading is buying and selling spreads, which is we will discuss spread selling and buying in a different video. But right now, after you turn this on, let's buy your first option. Let's go. As an example, we're going to use Google stock, which is right now trading at $1,382.98, right? To buy an option, you hit trade and you'll see the trade option button, hit it. All right, here is a discover option page, and one thing, not every stock has this discover option page. Usually it's only like really popular stocks, and some small stocks won't have this page, but it's totally fine. It's not a big deal. On this page you can find how to buy call option or put option, up and down, or they call it iron corner, which we'll discuss in another video what iron corner is, or how do you bet on stock going up and down, right? It doesn't really make sense, but it actually does make sense. You can see the short term, high risk options, medium term, medium risk, and long term, some risk. And this page is not really informative and not really helpful because it gives you a really small amount of options, and usually they have like weird dates, and usually ignore this page. I ignore this page 99.9% of the time. On top, you can see dates. Every single option has an expiration date, and on that expiration date, the option will be executed if it's actually worth some money, or will disappear if unfortunately you didn't guess the price movement and you're gonna lose your money. But we'll discuss that later. All right, so let's choose the May 22nd for option. Let's discuss call option first. So by buying call option, it means that you bet on the stock's price going up, right? So you bet that stock will go up and you'll make some money. Buying call means that you're locking the buying price at certain price. Like look, on the left you can see the big call numbers. They're big numbers and it calls strike price. So let's choose the top price, $1,395. So technically on a May 22nd, if you bought this option and price will go up till $1,500, you're gonna be able to buy the stock for $1,395 and sell it for $1,500, and you'll have a $105 in profit, right? Sounds amazing, but let's discuss that. Okay, on the right you can see the price in a red square. It calls premium. Premium is $7 and it's a price per share. So every single option, the minimum option amount is one contract, and one contract equals to 100 shares. So $7.05 is per share, so you have to times 100 and the price will be $705 per this for this option, the top one. Of course, you can see the different prices. The prices that closer to the price that stock is trading right now, it's higher. And in general, if you're buying an option for longer term, let's say if we're going to choose not May 22nd, June 12th, the prices will be much higher. As you can see, 28.55, because the probability of option going up is much higher, and there is a bigger chance that you're going to make money. This is why options cost more. All right, on the left side under the strike price, you can see the break even and to break even percentage. So technically you can see plus 1.38%. So the price of the stock has to go up for 1.38% so you make money and hit the break even price. The break even price is nothing else like strike price plus cost of a premium. You don't necessarily have to hit that break even price to make money. You actually can make money even below. It all depends on the volume and depends on the option price at that moment. And like I said, every single option has an expiration date. So on May 22nd, if the option worth some money, right? So it's in money, it will execute. What does it mean? So on May 22nd, you're gonna be able to purchase 100 shares of the Google stock for $1,395. If you don't have this amount of money, Robinhood will actually borrow you this amount of money, and in the history you're gonna see plus $100,000 in your account and then minus $100,000 in your account. It looks weird, but don't worry. Robinhood executes your order and you'll keep your profit. Or you can sell that option before and make pretty much the same amount of money. The difference between executing option and selling it before, the difference in profit is not that big, and sometimes it's pretty much the same. All right, so let's discuss put. Put, it's pretty much the opposite thing for call. Put, it's your locking selling price and betting on the stock's price going down. So if you're buying let's discuss the top put option, 1,395 strike price. So the stock will go down and it has to go down to 1,367 for you to make money. So technically on an expiration date, option will be executed and you will buy 100 shares of the Google stock at the price on that Friday, May 22nd, and then you'll sell for this price, 1,395. If you think that Google's price will go down on the May 22nd, you want to buy a put option. So just choose the put option that you want to buy and click on the green square. Just put the amount of contract. As you can see on the left, it says when what contract equals to 100 shares. Just type in the amount of contracts you want to buy. Let's put 1. The limit price literally means that the highest amount that you want to pay for that option. You can put a 27.40, or you can actually 27.4, or you can put 27.5, and it's gonna be a higher chance for you to buy this option. And then you click review, just blah blah blah, ask questions, and if you have enough money, voila, you bought your first option. Okay, and then you're gonna see it right here. A couple of things about trading options. Not every single stock can be traded as option. It all depends on volume, on how stock is popular, and it also depends on your brokerage account. So if you can trade option for that stock, you might want to change your brokerage account or just choose another The biggest pros for option trading is that you can lose more money that you paid for your premium. Do you remember that price in red square and green square? You can lose more. So let's say you bought a call option. You thought that price of a stock will go up, and for some reason some news came out and the stock's price actually went down. You can lose more than that premium, and this is the really big thing for trading, because you know in the beginning how much money you can lose and you can invest smarter. If let's say if you bought 100 shares of that stock and went down, you could have lost everything. A good example is Luckin Coffee. It went down for 75% and in 1 hour, and people lost 75% in 1 hour. If you had a options, you would have lost only premium and you would have been all set. Well, not all set, it's still a loss, but like better than losing 75% of your money on that stock. Can you make money of option trading? I think yes. I think it's a really great opportunity to make money for low or beginners, because you know how much you can lose in the beginning. Also, some options even of a good companies cost not that much, but you have to follow news, you have to know what is going on in the world so you can actually guess the price movement. And sometimes if you bought an option, let's say for 2 3 weeks, right, 1 week and second week can go up, and then another week some bad news will come out and the stock will go down. So you have to have a plan when to sell your option. If the total return hits a certain point, let's say 50%, just sell it. If of course, if some good news coming out and you think that it'll go up, you can keep it, but don't go too crazy. And even with $100, you can make a lot of money, much more money than with regular stock investing. And for new day traders, I still think that option is a really good option to build your portfolio, make some extra money. Well, that's it, guys. So thank you for watching me. Like I said, I'm gonna make a couple videos about option trading on my channel. So subscribe, hit that like button, hit that bell for notifications, and hopefully we'll see you soon. Take care.